I've blown trading accounts before. I'm sure a lot of people watching this video have done the same. The most successful traders also have blown up accounts, lost a lot of money. And in my honest opinion, I think it's necessary to lose money, maybe blow up your account, maybe lose a little bit of money, but this is how we learn the most on what not to do, and then we scale up what to do more of what's working. So in this video, I want to talk about what I did and what I see a lot of other traders in other communities do as well that prevents them from seeing success and enables them to lose a lot of money very fast. I'm also going to get into some actual trading examples on the charts themselves and show you what to do right and what we should not do. And then some very key psychology tips and tricks that we must implement in order to not blow up accounts, not lose a lot of money, and slowly go from an unprofitable trader and then start moving up to a profitable one. Before we get into it, I'm going to post a link in the description below to follow me on my Instagram at Ameritrade. I recommend everybody watching this to follow me. I post daily trading recaps along with very good trading tips and tricks that's going to help you become a better trader and also not blow up your account. This information you're not going to find anywhere else on the internet, which is why it's vital to follow me on my Instagram. Link in the description below. So the first thing I want to say is as we go through this video, I'm sure a lot of you are going to feel like I'm talking directly to you in your own trading. And if you relate to anything that I say, become aware of it, accept it, and understand that anything that I'm going over in this video is going to prevent you from seeing success, and you are going to continue to struggle and blow up your money if you do not switch up your approach. So listen to everything that I'm saying carefully. If you relate to it, understand that your approach must be switched in order to start making money, growing your account, and stop blowing your accounts and losing a lot of money fast. I'm going to combine the first 2 points into basically one because they are interchangeable and they are very relatable, and one cannot exist without the other. When I first started out trading and when I lost a lot of money, blew up an account, and I'm sure a lot of people can relate to this that also blew up an account. A lot of traders go into the market without a trading plan, without a system, and without an edge. Now, because of this, we trade based off of emotions. Anybody could have success in the market, but what separates a profitable trader to one who's blowing up their accounts are ones who are buying and selling or making trading decisions based off of emotions. And we aggravate these emotions by going in every day blind, without a system, without a plan, and without an edge. I seriously remember one of my first trades in the market. I think I had about $3,000 in my account. This is back in 2016. And I saw the market rallying very, very strong. And this is when I first got into trading. I really didn't have an immense amount of knowledge. And I saw the market moving up. And part of me, what I was doing was I had the mentality of, okay, the market's moving up just like this. I mean, the charts were identical. I seriously remember this to the T because this was one of my trading experiences that I will never, ever forget. So I saw the market move up like this. And what I did was I kept shorting the market. As we were moving up, let's just say I bought 100 shares or one contract. And then as we kept going up, I kept shorting. We move up even further, I short some more, and I'm basically adding to a short position as the market's moving up. I didn't have a plan. I had no reason for getting in, but it just didn't make sense that the market should be this high. I thought the price of the stock was way too high at that moment, and I kept shorting it in anticipation that this move didn't make sense, and I was speculating that we were coming down. I didn't have a plan, and I just kept selling and selling and selling as we kept moving up. And eventually the market just kept going up. I had a $2,300 loss on a $3,000 account in a matter of 30 minutes. And it scarred me my first 2 years for life. So what I see a lot of traders do is maybe they plan out the night before, the morning of, or maybe they don't even have a plan. But the market opens, they get itchy to put a trade on, they have adrenaline, they can't sit still, and they want to be active, they want to make money, and they want to have an open position because they want something to do. Maybe they're bored behind their screens, but they just want to be an active participant because they want to make money. So what happens is the market's moving down, maybe we're moving up, but just because the market is open or moving down or moving up, traders get in off the sole fact that the market's moving. Maybe we're putting in lower lows, lower highs, higher lows, whatever the case may be. a lot of traders are getting in without a plan other than the market's moving, just like I did with that big losing trade. And they're shorting, let's just say, because maybe we broke a low a day and the market's trending down. They get in short, and then guess what happens directly after? The market absolutely reverses and they stop out of their position. So if you trade just because the market's moving up, you're buying it. And just because the market's moving down off of that sole reason, you're entering a position, you will never consistently make money. You might hit one trade that works out well, think you're the man, think you're the best trader, but I guarantee you that's not a process you could repeat. The idea of having an edge and a system and a plan that works out for you is you want to be able to repeat that process on a daily basis, a weekly basis, a monthly basis. And if you can't repeat that process with obvious losses, as some trades you're going to lose, but if you can't repeat that and have a positive outcome in the long run, then that is not going to make you successful. And I guarantee you your account is going to slowly bleed down or fastly bleed down if you are guessing and blindly entering the market just because you want to be in or you feel like the market should be up or down. With this being said, a lot of traders have improper stop loss placements, or they just do not implement proper risk management. Use that example of me shorting a very strong market with no plan and no risk management as a perfect example. I lost $2,300 on a $3,000 account in a matter of 30 minutes because I didn't have a plan and I didn't implement a stop loss with proper risk management. Before you go into any single trade you take, you must define your entry, your target, and your stop loss. This is how you have a plan, and this is how you implement proper risk management. For example, here is the S&P 500, and let's just say our plan was to play the market long off of this demand zone. We get long at this oval that I'm highlighting right here, and our stop loss is the low a day around 3942. So we have about an 8-point risk to the low, and let's just say our target is this previous high over here. So we're risking about 8 points to make a potential 22 points to the upside. That's a 2.5 risk to reward. Simply by calculating where our target is compared to our stop loss, we have to know if it makes sense for us to enter the trade. If we had the same entry, and let's just say our target is right here where I just highlighted, at this point now we're risking about 8 points to only make 8 points. So it's about a 1-to-1 risk to reward. That's not a proper risk to reward. The slimmer our risk to reward, the more times we have to win. As traders, we have to position ourselves to lose as much as possible, yet still be profitable. And in order to do this, we have to make sure we're taking trades with at least a 2-to-1, anything above 2-to-1 risk to reward. We could have a 50% win rate, meaning we win only 50% of our trades, and we'll be a break even or a profitable trader, and we won't lose money even though we're only right half of the time. So you want to position yourself to be as wrong as much as possible, yet when you are correct, those winners are going to take care of themselves and they are going to outweigh those losers. Maybe they have one large loser, for example, $2,300, and then they take another trade, it wins, they win $200, $100, $200, and then the next trade they lose $1,000. And just like that, their account's blown because number one, no proper risk management, and they didn't implement a proper stop loss. So for example, let's just say we're in long at this oval. Again, our stop loss is at the low. The market comes up and we start moving in our favor. This could be for any market, any stock, Forex, crypto, does not matter. The concepts I'm explaining are relatable to every market, as pretty much every market is an auction and every auction will be the same and have the same characteristics. So we're in long right here. We expect the market to rally up into our pink box, which is our target. Then immediately the market starts moving lower. Now our position is in the red. Now put ourselves in the position of a struggling, failing trader that just keeps losing money and blowing up an account. As the market's pulling back right here, this does not really prove our analysis incorrect. Although we are red on this trade and the market's not moving in our favor right now, our stop loss never triggered. So number one, we should still be in this position. And number two, if you're looking at your profit and loss and you're seeing your position fluctuate green to red, you see yourself up $100, then down $200, You are going to make decisions based off of your emotions. And if you remember the first point, if you trade off of emotions, it's going to be very difficult to be consistently profitable. So stop looking at your P&L. That aggravates your emotions. And also just trade the chart. Focus on what is in front of you at this moment. The present moment gives us everything that we need to know. The past is over. The future is non-existent. So the present is really a present, and we must focus on what the market's telling us. In this case, we have absolutely no reason to stop out, even though our analysis is not working out right off the start. A lot of traders want to be correct all the time, and they want to be correct right now without delaying their gratification. Everybody wants instant gratification in the market, and that just is subject to failing and blowing up your account. And if we remained our stop loss, the market grinded up. If we did what the chart told us, this would have been an excellent winning trade if we didn't let our emotions get in the way and we practiced proper risk management with a proper stop loss placement. The next point is a lot of traders, and I did this too. I first got into trading because I saw people posting these crazy cars, lifestyles, and I wanted to be just like them. I wanted to make a lot of money very fast. I wanted to be a millionaire, grow my account, etc., etc. If you go into the market with unrealistic goals or goals in general with the intention to actually make a lot of money and get rich fast, you are never going to be successful. In my honest opinion, you might agree with this, you might disagree with this. Having goals in the market, monetary wise, is improper to success. I never wake up one day and say, okay, I want to make $100 today. Or okay, I want to make $500 today. That's improper, right? This is trying to expect an outcome that we do not have control over ourselves. And now if you had a goal saying, okay, I want to read 10 pages of my book today, or I want to journal all my trades, or I want to review my setups after the market open, that's a proper goal. But having a goal saying, okay, I want to make $1,000 today, I want to short Apple, I want to long Bitcoin, that is not the right approach to the market. We cannot physically control the next outcome in the market. However, what we can control is our emotions and our mindset towards the market and towards ourself. So if you have any goals or any expectations that you want to make money, throw that out the window, trade the setups and trade the charts. You'd be surprised. Imagine you had a goal of, let's just say $100. You wake up, you take a perfect, excellent setup. Maybe you short this little supply zone up here and the market sells off very aggressively into demand. Your goal for, let's just say $200, as soon as you hit that $200 goal, you sell that full position, let's just say right here, right? Now you get out because you hit your goal, you want to walk away, you feel like the man, you're going to go buy yourself a $200 steak dinner with your $200 profit. Then the market keeps selling off. And now your $200 goal or your $200 profit is now a $1,500 profit. And you're sitting in the market with regret because you sold too early, because you had a goal, you hit that goal. What if they exceed your expectations? Or what if they don't exceed your expectations? And now you're feeling drained, or you're feeling like you did something wrong. And that's going to affect your next setup, and that's going to affect your mindset for the market tomorrow, the next day, the next trade. It's a mental game. If you can control your emotions and your mindset, you will have success, believe me. I contribute a lot of my success to my discipline, to my patience, my sitting on my hands and waiting for a proper setup, and my mentality with the market, with clear thinking, ignoring all the other noise. Speaking of noise, I'm probably going to get a lot of shit for this in the comments. And to be honest with you, I don't care. At the end of the day, these videos are created not only to show transparency with the trades that I take, but also my overall outlook on the market. On top of this, it's to help everybody watching these videos and everybody in my own community. With this being said, if you follow signals or alerts from another trader, you will never, ever be profitable and you will never be successful in the long run. Number one, you need a strong, solid foundation. And following somebody else's alerts, buy SPY calls here, buy Apple puts, buy Bitcoin. You will never learn from it. You might make money on one trade, but I guarantee you it's not going to make you money in the long run. You are never going to learn the backbone of it. You need to have a solid foundation, because once you have that foundation and you go out in the battlefield knowing what you need to do, once you're on the battlefield, then you could figure it out yourself once you experience it. If you follow alerts and signals and just buying just because Joe Schmo on the internet told you when to buy and sell, I don't see how anybody could expect to be profitable in the long run. You might make money on this one setup, but remember what I said earlier. Is this process repeatable? What if this Joe Schmo guy takes all your money, leaves, and doesn't ever send out alerts again? How can you expect to be profitable without holding the hand of somebody else? You build zero confidence if you follow somebody else's alerts. How do you expect to be self-sufficient if you don't know how to go out and fish for yourself? If you don't know the pond that has the biggest and the best fish, or you don't know how to cast the fishing pole, or you don't know what type of bait you need to use and when you need to use it, how do you expect to catch the fish if the best fisherman is not going to be there telling you where to go and what to do? So in order to be self-sufficient, you need confidence. And how do you build confidence? You build confidence by having the proper knowledge on telling you what to do and when to do it, and then you conform it to figure out what works for you the best. This is what I think is the best part about the Investor-Trade community, and what separates Investor-Trade from others is other traders are just giving you alerts and signals without showing you how to fish and without providing the tools and the roadmap necessary to be self-sufficient and figure out trading on your own without hand-holding of another trader. And again, I'm probably going to get a ton of shit for this. I don't really care because it's going to take other people's business away. I'm trying to help everybody out here, and if you follow alerts, I do not know one person that follows trading alerts that says they can be consistently profitable without those alerts. And these are the same guys that their charts look like this. They try to sell you a fancy indicator. When the MACD crosses the RSI and the stochastics is oversold or it's in the middle, then the market's going to go up 100 points and we should take the market long. Oh wait, this does look good. Everybody buys SPY calls right now. It's going to shoot to the moon. This is the wrong approach with trading. In my honest opinion, and I'm only saying this because I didn't have success with it, and the ones who transition to their screens looking like this, to screens which look just like this with nothing but price and volume, those are the ones who have success, especially when they stop following alerts and signals and focus on true price action without all the other indicators when their charts look just like this. So if your charts look like this and you are having success with it, go for it. Nothing wrong with it. If anybody has success with what I'm saying not to do, keep at it. Don't listen to me. I'm only speaking for the ones who don't have success that are doing the things that I am saying. Think about this example. The stock market is just like a car auction, a real estate auction, a watch market. It is all the same thing. Buyers are buying based on what they think is a good price, and sellers are selling but based on what they think is a good price. The market does not move because of these indicators. These indicators move because of the market. So if something moves because of the market and we get the reaction after the market moves, it lags. And anything that lags in our trading is going to skew our risk to reward. With this being said, everybody that I know personally on Wall Street, 7-figure, 8-figure traders, even those in the trading community, including myself, those who focus strictly on price and volume and react to the actual auction place in the market by reacting to price and volume itself, could be a naked chart, could be volume, could be time and sales, could be level 2, could be a footprint, market profile, volume profile, depth of market, any organic price and volume tool that gives us the reaction to the actual orders coming in real time, when somebody's buying, when somebody's bidding, when someone's offering, when someone's selling. This is the truest edge in the market, and these are the traders who will have success. So if you are listening to this and you are struggling with indicators, if you are doing great with indicators, keep at it. If you are struggling with indicators and you want to switch up your approach, focus on price and volume analysis, combine it with supply and demand or any other organic price and volume tool, and it will be perfect, and that should be your edge. The transitioning point from when I was losing a lot of money to when I started making money and seeing success slowly start building in my account was when I started journaling all my trades, reviewing my setups, and backtesting. If you skip this step, and I'll be honest, it's the most strenuous, it's the most amount of work we have to put in. We have to basically dissect our trading from the inside and out. But if you don't journal all your trades you take, even review setups you didn't take and figure out how you could have taken it, maybe record your screens, take screenshots of charts, put them on your phone when you're bored, sitting on the toilet. Instead of scrolling through Instagram, maybe scroll through the charts and look at how you could have traded it better or what you should have did. And also backtesting. These are 3 important concepts that you must implement dissect your trading, figure out what's not working for you, and scale up what's working for you the best. The only way you're going to be able to do this is if you collect data. And when a lot of people start out is they don't invest in themselves, they don't invest in education. If I had somebody like myself when I first started out, it would have sped up the learning curve significantly. A lot of people think they could do it by themselves, which you can. However, to speed up the learning curve and to understand the proper road you need to drive down, in my opinion, spending money on a book, a course, or someone you might look up to will be a very, very good investment. So for those who have agreed with anything that I've mentioned in this video, remember, switch up your approach if it's not working. You're not going to wake up one day and it's going to magically work and you're going to be profitable. You must put the work in, understand what you're doing wrong, and figuring out how you can improve. I would appreciate it if you could drop a like on this video, comment any questions. If you haven't subscribed to the channel, I would greatly appreciate that. And also, if you want to learn more, check out the links in the description below. But I'm going to end it on that note. Peace out.